Welcome to That Backyard Property Podcast. I'm your host, Michael Killiner, and I'm a father, a husband, and a mortgage broker. Our goal is to inspire, educate, and empower people through property. Whether you're a first home buyer, whether you're looking to upgrade or downsize or invest in property, then we're here to help you. Each week, we'll have a special guest that's an expert in their field, and they'll guide us through all of your questions that you might have, plus a lot of other information. So let's do this. Welcome back. We are so excited. Well, I am so excited to have one of the most genuine and authentic people I have personally ever met. The director of Money Quest Group, Mike Russell. Welcome.
Thanks, Michael.
It's so good to have you here. Just off the plane.
Yes, half an hour, smooth flight, and beautiful sunshine outside. So very happy to be here.
It's very, it's not very Melbourne-esque, is it?
Melbourne at the moment is going through some nice weather. We're just warming up into some nice weather, but the sun's shining, so not unfamiliar with it.
I've been really excited to have you on, to be honest. I
haven't been.
I know you haven't been. I always love talking to you. I find you so authentic in everything you say, and you're so genuine. So, I guess you've seen so much within the property landscape across the country over many years, without talking age or time frames, but you've seen plenty in the landscape. The place I wanted to really start today, and it's the same place we start with everyone, is tell me about your first home, and whether that's your first home as a family home, the one you grew up in, whatever it means to be a home. Tell me, talk to me.
Yeah, that's a big question. Whenever you talk about home, I think of my home now.
Yeah.
And I think the older you get, your home becomes so important. It becomes your pillar of strength and your reason, your motivation, your inspiration. But with me, my home is everything. That's where my family grew up, and that's where my kids come back to. And it's the older I've got, it's just my place of happiness. And home's an important word the older you get. But in terms of growing up, I grew up in Moorabbin, which was probably lower middle class back in the 60s. And in terms of very, very happy family, we didn't have much, but we were four children, 3-bedroom home, and a very happy family. And in terms of my first home, it was in an outer Melbourne southeastern suburb called Dingley. But it was a first homeowner suburb, and it's what we could afford, and that's where it all started.
It's amazing as a father now myself, and there's that element of trying to replicate the family home that you possibly grew up in, if you do have fond memories of it, with the one you try and emulate at home. And there's the smells and the fun and the laughter and all those things, the concoction of it. It's a pretty special place.
Oh, it is. And we've been in the suburb of Beaumaris now for well over 30 years, and my wife will never leave. And you mentioned there's a big distinction between a home and a house. A lot of people strive for big houses, and that's okay, but there's a big distinction between a home and, we're at the point now, we're empty nesters, and so the 3 kids have gone, and it's sort of changed it's changed a little bit, but the kids come home, and when they come home, it's like, rewinding 25, 30 years ago. They go to the fridge, they go to the cupboard, they
go to the wallet.
They do what they want. They leave their clothes on the floor. If they have a swim, they leave their dishes out. Nothing's changed. But it's lovely to see them just slip back into their home.
It is that safe place, isn't it?
It's a very safe place. There's no judgments. It's a happy place, and I think now that I'm entering semi-retirement, or that next phase, I guess, your home, it's just become so much more important to have a happy home, and a home that people can come back to, and a home that they can feel safe, and secure, and talk to mum and dad about everything. So yeah, it's important.
It's funny that just the different stages. You're the empty nesters, and we're the chaotic baby toddler stage, and there's days where for us, you kind of look forward to that, but I'm assuming that in your shoes, you kind of reminisce on those memories as well. So it's one of those strange
Oh,
paradoxes.
very much. I tell my kids often that I loved them a lot more when they were younger.
Yeah.
I didn't, I think you're right. When they're really young, you're wanting them to grow up to be a bit more independent, to make life a bit easier. But you got to be careful what you wish for. Those years go past very, very quickly, and you have to cherish them. And I guess, you and mine are in, your self-employed business. You're probably working very long hours, and you're trying to, get this so-called work-life balance sorted, which is very hard. But you don't have to worry about that too much. You don't have to be too focused on that, because providing you're there and present for most things, your kids are always your kids, and they'll always come back home. I think this whole work-life thing is a bit overrated, to be honest. You've got to strive to be the best you can be at work and be a provider and all that sort of thing, and you'll be fine in the end.
How like you touch on work-life balance. I guess it really is just life balance in the end. You've had some pretty important managing director, CEO roles over your journey, and no doubt they were relatively time-consuming. How did you manage to stay part of the home and family balance in that?
Yeah, look, I think it's a really good question, and I'm often asked about, it's one of the big challenges of anyone that's successful in whatever whatever their profession is. Trying to, there's that concept of guilt. If I'm working too hard, or if I'm away from home a lot, you're carrying a lot of guilt. I'm missing, important moments with my kids and these sorts of things. And I was probably lucky that, I've got a wife that that was so supportive in what I was doing, that she just took care of it, took care of the house, took care of the kids, and and really supportive in what I was trying to do, which was, to run good businesses and try to be a good CEO, try to encourage, success within my ecosystem. And I enjoyed work, and I still enjoy work, but I was also working for a purpose, and that was to provide a better life for the kids, and also set them a bit of an example. And my father was a very hard worker, and subsequently myself and my two brothers and my sister we've got good work ethics. So I am a believer in trying to set a little bit of example when your kids are young. And I never missed the milestone events in my kids' lives, but I did make sacrifices. I made a lot of sacrifices running the company where you worked for many years.
Yeah.
I was on a plane Monday morning till Thursday, Friday, working in Sydney. And that was a sacrifice, but you got to make sacrifices. Nothing comes easy in this life. And I was asked yesterday, I did a coaching session, and someone said, look, what's the most important thing in a business? Is it tech? Is it that? And I said, work ethic. You just break it down to work ethic and having to make sacrifices. But yeah.
Yeah. It's always hard to determine the sacrifices, because you don't know the outcomes. Generally, for me, I'm a strong believer of cause and effect. So you work hard, and you eventually get the fruits of your labor, but you never know when they'll come and what they'll be. You just have to put your head down.
You got to be brave, right? You got to be brave. You got to be courageous. You've got to back yourself in. But you're right. You don't know whether all this sacrifice and hard work is going to manifest into something productive and enjoyable. But that's half the challenge of life. A lot of what we do has unknown consequences, and that's fine. That's exciting. But this whole work-life thing, and I know you and Mima are wonderful parents, and you talk about your kids every chance you get. You carry that through. I wouldn't be too worried about working hard or having that uncertainty. If I'm putting too much life into my work and it doesn't work out, is that a mistake? No, it's not.
Yeah. It's funny talking about the kids. I reckon every time we've caught up, you've shown me a video of one of your daughters singing Fleetwood Mac. So
Oh yes,
there's obviously being a proud parent is very common.
yeah. No, I've got three beautiful kids, and the middle one's the singer songwriter, and I grew up playing a lot of Fleetwood Mac, and she, in addition, or to support her own songwriting, she does corporate gigs and pub gigs and all this sort of thing, and she sings a lot of cover versions, and Fleetwood Mac is always front and centre in the cover version she sings. Yes,
It's very relevant for Tusk. If we kind of look at the property market, because it's obviously what we're trying to base a lot of this podcast on, you've seen plenty of them. You've seen plenty of cycles.
yeah.
And one thing we know is that history doesn't always repeat, but it certainly rhymes a lot of the time. What are the big takeaways you've seen in the property market over your journey within the industry?
Yeah, just there's in Australia there's not generally one single market. There are different markets happening across geographies. But what I do know is that everything runs in cycles. There are always cycles, and a lot of people try to pick the right cycle. They try to pick the bottom of the market. But everything runs in cycles. But over time, the medium long term, property has proven to be a wonderful asset, a wonderful financial asset to invest in. But we're seeing a real two-speed property market at the moment. We're seeing, Melbourne and Sydney in negative territory, month on month, quarter on quarter, and even annually. CoreLogic put out its numbers yesterday, and certainly where I live, that the market over the dwelling price over the last 12 months are in negative territory. Yet I did look at Perth.
Very
and
foreign for most of the people over this side
yeah,
of the
well,
country.
Perth 12 months it's hit 20%, which is just unheard of historically, but 20%, and it is slowing. It's a quarter on quarter. It's 12%, which is it was 3% up in the last quarter. Yeah. So imagine slowing to 12%, right? But everything runs in cycles. But overall, the property market is pretty strong in this country, and it's like when we entered COVID, and all the banks and the economists were predicting falls of anywhere between 12 and 25% in property. And the smart money was, no, it's going to continue to grow. Why? Because if demand for property exceeds supply, price can only move up.
Economics 101.
Economics 101, demand and supply. And in Australia, we are still enjoying, growth in our population numbers. And whether it's natural births or whether it's a result of net migration, these people need shelter.
Certainly do. It's what is the bottom rung of Maslow's hierarchy of needs, isn't it? Yeah. We always love intergenerational or generational warfare. So the old giving stick to the boomers, and the boomers saying it's too easy now, and all those sort of things. And property always comes up in that. And so you've seen that journey yourself. Do you think it's harder now than it previously, or do you think it's all relative?
No, I think it's a good point. I think, and you're right. A lot of us in our 60s look back and go, we did it harder.
So much harder.
We saved longer and we saved more, and part of that is true, but part of it, and a large part of it, it is so much harder now for first home buyers to save a deposit and get into the market without some help, predominantly from their parents. And there's a lot of reasons why that has occurred. One of the reasons, or there's many reasons. One of the reasons it's frustrated me for years is, for many, many years, and I don't know for how long, but for many years, certainly when I bought my first home, and many years after that, there was a nationally funded first homeowner grant, a FOG. And, I bought my first home, I think, I don't know, it was $68,000. And I can't remember what the FOG was then, but it might have been somewhere between $5,000 and $10,000. And that helped me get into the market.
Absolutely.
And it really helped a lot of first homeowners get in the market. And I've been very critical over a long period of time to say that really should have been indexed to inflation, and it should have just been budgeted for and continued to be offered to first home buyers. And I think that has made it increasingly difficult. The other thing that's made it difficult, and again, baby boomers will criticise, but when we bought our first home, we knew there's no such thing as investment properties back then, rent vesting. We bought our first home for occupation.
Yeah, to live in, yeah.
And we knew that we had to buy in the outer suburbs. We knew that we couldn't buy in the place that we were living now. We needed to buy where we could afford, and we were all buying in outer suburban areas, our first home. And a lot of baby boomers now, a lot of people are critical of first homeowners now not wanting to buy out into the outer reaches, and they've got good reason, because quite often the capital cities have expanded so much, and the public transport system, I don't think's kept up with pace, and if these people work in the city, you've really got to think about the time to commute and all these sorts of things. So very easy to say now, well, you've got to buy way out, 30 kilometres, 40 kilometres out that way. So I think and obviously, capital city dwelling prices have exploded. But to answer your question, it is a lot harder now for first homeowners to get into the market, and that's why they need, as soon as they've got an inkling they want to buy a home, that's why they've got to go talk to someone like yourself, talk to a really good, competent mortgage broker that can start to educate and plan and budget and show timelines, and at least allow them to work towards something.
Yeah, it's really interesting when you talk about the timelines, because a lot of the time you are seeing someone who is wanting to buy in 12 months, let's say, and saying, well, what do I need to do today to get me there? And if you're setting the path and you're saying, well, in 12 months' time, if you save X amount over that period, let's call it 10,000, and then you save another 10,000 the following year, you're then saying, well, you got 20,000, hopefully there's a little bit extra in there. You have the ability to buy something that's 400 and 450,000 at the time based on government schemes. I guess then the problem is, well, what happens to the market in those 2 years is always the hard part. But if you took away the market and said, well, in 2 years' time, you could go from zero to owning your own home, that's pretty amazing.
Oh, it's really powerful. And it was one of the very early value propositions of our industry, of the mortgage broking industry, was that, we accepted that not all buyers were coming to us ready and willing to buy a property, but part of our job was to be able to put people on a path to home ownership, which meant budgeting and calculating their requirements and seeing if there are any other options available to them, such as parental support or whatever it might be, state or federal government grants. Yep. But it's a message that's been lost a little bit, and I think with first home buyers having such a challenge now, our industry, and certainly, your business, which is doing so well, congratulations. We need to be putting that message out there. If you've got an inkling to buy your first home, come and see us and let us start putting a plan together.
Yeah, because there's negative media sells, and so you're just constantly being bombarded with media or property experts saying that it's too hard to buy as a first home buyer, when the reality is it is difficult, but it's possible. And the amount of people that I sit down with in that first home buyer category that say, what do I need to do? And you put them on that path and they go, is it that simple? We say, well, there's sacrifices, but yeah.
Well, the sacrifices are a good put, Michael, because when people lose hope, when they think they don't have a hope to buy a first home, when they've given up hope, they go out and run up charge cards, run up credit cards, and they really start digging a hole for themselves. So, again, to give them hope, and Tusk Finance can, in that plan, will probably say things like, you need to make sacrifices, you need to stop using this card, you need to pay this card down, because the existence of credit cards significantly reduces borrowing capacity.
Yeah. Well, that glimmer, after the meeting, you can see the first meeting anyway, you can see that glimmer in their eyes where they think, I can actually do this. Yeah. This is amazing.
It's wonderful.
Going on that broking path, you've been in the broking industry almost from the start. Is it close enough?
No, not from the start. It probably started. The first sign of mortgage broking was probably early 90s, and then the industry really got going in the late 90s, and I came in early 2001. So early, I think the market share, the mortgage broking market share was 13% then. So I didn't get in from day one, but I got in quite early.
Because 13% to 76% now.
Wonderful.
And from my understanding, the UK is in the 90s, and I can only see it going that way. The value proposition is clearly there.
I think the value proposition's unmatched. You've got a choice of lender. You've got a best interest duty that means that you've got an obligation to put the client's best interest first in terms of the selection of the lender, the selection of the product, and you're very, very happy to see the client generally at a time or place that suits them. And you're offering old-fashioned customer service. And there's a couple of things, and a lot of I think the banks have probably realised now that it's got away from them. But if you continue to close bank branches, and you continue to try to force people down a pipe with their home loan inquiry, they're going to resist. And now they know there's an alternative, which is mortgage broking and businesses like Tusk Finance.
Yeah, it's quite a big uproar in the West with Bank West shutting all their branches, and it certainly makes people feel a little uneasy about that. And I guess you kind of step in there and say, well, luckily you do have other options. If you're then looking at the industry, where do you see it going from here?
I think it's definitely going to continue to grow. Back in 2001, consumer awareness of mortgage broking was still quite low. That was the challenge, to really educate those consumers that weren't aware of how valuable the proposition is of a mortgage broker. Now the awareness is very well known. Yeah. And I think again, if banks continue to close bank branches and want to rely on online mortgages or telephonous-based mortgages, or seeing people in a branch that resembles more of a cafe that's noisy and not very personal, I think the industry will continue to grow. And the other thing is, providing the industry continues to offer great service. Businesses like yours that offer a great service proposition, those clients are going to tell their friends that might not be aware of the value of mortgage broking, and I'm sure they will think about using a mortgage broker for the next transaction.
Yeah. It's and it's almost that generational shift as well. Yes. I've been with my bank for 20, 30 years. I had a bank manager. There's not much of that left.
There's not much of that left.
And the new wave is certainly either going online directly, because that's obviously an option, or you're having an advisor there. There are so many stakeholders within a purchase of a property, though. So I can see it certainly streamlining a little bit, and maybe a few less stakeholders are involved. I don't know what that looks like, but I can certainly see, a few people being removed from that, and I just can't see it being brokers, though.
Yeah. Oh, look, I think, the big debate from the day I came into this industry was, whether, the banks could force people down an online, mortgage experience. and almost every bank has tried an online mortgage experience and all failed. And we've had foreign banks come in and they've tried an online mortgage experience and failed. And that is because it is such a, it's such a big transaction. And you know this yourself, Michael, no two home borrowing applications are ever the same. There are always distinct differences. There's always things unique in a home loan application that is very hard for an algorithm at this stage to assess. And also, the one thing we talked about first homeowners before, the one thing that has changed, whilst it's hard, it's definitely harder for them to save a deposit and get into the market. The big change that I've seen now is that first homeowners are far more discerning now. They're more educated. They can go and research better now, thanks to Google. They're more discerning. They're more understanding. But here's the thing: even the most worldly, even the most discerning, well-educated first home buyer that probably could, if they wanted to, transact online with an online mortgage, they don't want to, because they still want to have all of their research validated, and they will still have questions, and they still like the idea of this concierge type. We all love being treated well, right? We all love the concierge experience, particularly whether we're dining or traveling. And mortgage brokers are provide a wonderful concierge experience.
Yeah, absolutely.
And
it's funny that
why
you
do it
mentioned,
yourself?
well, why do it yourself when you don't have to pay? Also, one of the most stressful parts of buying a property is making an offer and going through that dance with a real estate agent. And that's generally where most people are needing some support and some help. And so, yes, the application might be straightforward, maybe, if you're lucky. But the biggest thing that I find people want help with is, how do I actually make an offer? Because you're talking about hundreds of thousands of dollars, a lot of zeros. And if you've never done it before, or you've done it once before, it's incredibly daunting. And you never know whether the real estate agent's telling the truth. There's some fantastic ones out there, but there's also some shocky ones. And so that's generally where I'm getting a call on a Saturday to say,
just for some advice.
Just what do we need to do? And they don't really want to go to their parents, usually, even if you say the same thing the parents would. But actually, talking about, because I wanted to ask you about this, talking about parenting now, because you've got your three beautiful kids, well, not kids anymore, but adults. Given what you know within the industry and your wealth of knowledge, how have you educated them on property? Because it's not something you generally get taught at school.
No, it's not. But they've grown up with it. In the house, they've grown up with it. They all have a reasonable understanding of it. So certainly my son, when he bought his first property, we spoke about it a lot. We just spoke about the whole process a lot. I encouraged him independently to attend a lot of auctions, which he did. And he really, he learnt how an auction's conducted. But they're lucky they grew up in a house where that's what we do, right? So I've had two of my kids buy houses, and they lean on me a little bit, but they're all pretty intelligent, smart young people. Yeah.
Even when they are, it's still giving them little bits of education and advice on it, because it is one of the largest transactions, and obviously where your wealth can be made.
Yeah.
And we're just not taught about this, and we generally don't even tell our close friends or family about our own property situations and our debt and our income. So when it's all so closed, behind closed doors, it's difficult to understand where everyone is positioned and how it actually all works.
Yeah. So one of the things I did talk to the kids about a little bit was, I mentioned earlier about, as first homeowner in my generation, you had to go out. And, I think it's important to talk to your kids about, if they are looking for a first property, is it a home? Yep. Is it for owner occupation? Or are they wanting to enter the property market for perhaps investing? And you know what I'm talking about with this, if they're two very different things. You know, if you do want to buy, if you are ready to go out and buy for owner occupation, and you don't want to live out into the you know, in the outer suburbs, then you've got to be realistic. You might only be able to afford a, you know, 1 or 2 bedroom apartment as distinct from a house. So it's just teaching them the basics of, you know, your money can only go so far. You know, what are your options? And you know, we've had plenty of those sort of discussions.
Yeah, it's funny when you mention about the value of the money, because when I'm sitting with people and you're saying you can afford, let's call it 600,000. 600,000 is the same amount of money anywhere, but you just get a different product.
Yeah, a different product. That's exactly right.
And you just have to be comfortable with the product you get. Do you want 4-bedroom with a house with a theatre that's an hour away, or do you want a 1-bedroom apartment near the beach? It's very, but you have to discover that yourself. You can't get someone else to tell you what you should be getting.
Yeah. And I think, you know, as I said, I think the kids nowadays, providing you clearly explain what their choices are, they get it. And they just need to work through that. The advantage is there's, you know, I've always said to my kids, jump online and, you know, do some reading. If you've got any questions, come back to me. I said I've had two to buy a home. One of them's got a home now, and my youngest daughter has decided to move to Scotland to live. So, you know, she's engaged to get married next year. So things change.
It's I certainly do. I'm just thinking about a 4.5-year-old and 2-year-old and venturing out into the world on their own is quite daunting.
You don't have children for them to move overseas to live. That's for sure.
No, it's Perth, as you said before. It's had a tremendous run, and it's continuing to move, but at a slower pace. Everyone's looking for the next big thing, and I'm certainly not going to ask you for any crystal ball predictions or anything like that. But what I've seen a lot of people talking about is that Melbourne market, because it has come off so much.
Yeah.
And now it's the most populated city in Australia. Because I understand they've just brought in a few suburbs, added a few. There's got to be some movement in that market in the next 5 years.
Yeah, look, it is now the fastest growing capital city, and because of that, you know, housing demand, it's a great driver for housing demand, the key driver for housing demand. There is now, I think we're getting the sense of a lot of pent-up demand that will need to be released soon. You know, the investment property market's come off significantly because of our state 10-year land tax surcharge that is driving investors crazy. In fact, a lot of Melbourne investors are investing in your market here, as you know.
Absolutely.
But there is a lot of pent-up demand that will be released, and I think that with all of the demand, you know, prices will eventually move back into the black. In terms of you know, where and what type of home, you know, I'm a little old-fashioned, so you know, we know that land appreciates and buildings depreciate. So I think if you're going to buy, you know, apartments, let's say, you need to do a lot more due diligence and a lot more assessment on what you're buying. But certainly it really doesn't matter too much nowadays if you're buying a house and a plot of earth. Over time, you're generally going to be okay. But in terms of which suburbs and whatever, I think in Melbourne we've anyway, without getting political, the public transport system is a breaking point. So a lot of people looking to buy are making sure they're buying in areas and alongside good public transport if they do need to travel to work or whatever it might be.
We were just going through that process ourselves, so I know exactly what you're referring to. Wrapping up, and this is probably the part that I'm quite excited about. Without putting you too much on the spot, what do you've had such an amazing career, and you've done some wonderful things, and you're the type of person that people follow. The first time I met you, I knew that you're the type of person that people follow. You lead from the front, but you also bring people with you. What are you, not saying your career's wrapping up, but it's certainly slowing down with you 2 days a week instead of 7.
Yes, I've just stepped down as CEO, and that was a hard decision. But I've got someone younger and with a lot more energy, and he's going to do some awesome things in the MoneyQuest group. Yep. But not
I'm very
retiring.
excited.
Absolutely
not retiring.
not retiring.
No, definitely. I didn't say the big R word. But what are you most proud of in that space as a dad, as a husband, as a CEO? Like, it doesn't have to be one thing, a couple of things. Where's your mind take you when you think about that?
I think if you split work and home, I'm really proud of my 3 kids. I'm incredibly proud of my wife for how she's kept the home fires burning and and really helped me raise 3 wonderful kids that are all great social citizens and incredible kids. In terms of work, you look back and I say a lot, and the mortgage brokers at Choice and Mortgage Choice and MoneyQuest Group are, probably if they're watching, they're saying, don't say it, please don't say it. But, I always say, I've worked largely with self-employed. I had a banking career, but after my banking career, I worked a lot with self-employed business people. And I say quite often that, fortune does favour the brave. And to be self-employed, you've got to be brave, you've got to be courageous, and it does. It's not for the faint-hearted. So I've really enjoyed working with self-employed, independent business people and watching many of them go on and just create enormous success in their business and be wonderful role models at work and at home, and I've really loved that. I think in terms of my own career, I probably had a crack, so I've enjoyed having a crack, and I look back and I've seen so much, and one of the things that when I started off in my banking career, and I had an opportunity, and I've kind of been lucky because I've kind of chased trends. I've chased cycles.
Well, you make your own luck.
Yeah, I don't know about that, but when I started off, I was very fortunate, ANZ graduate program, and had a great few years at ANZ. But one of the greatest things that ever happened in this country, and it doesn't get mentioned enough, was the Hawke government. They had 3 or 4 terms through the 80s and I think early 90s, but certainly through the 80s. And it was the Hawke government under Paul Keating that realised that, in the early 80s, that our banks were far too few. They were becoming lazy, they weren't innovating any product, and they had it far too easy. And it wasn't, we didn't have a very competitive, robust, innovative financial markets in banking, that's for sure. And they saw that as a problem, and they ran a couple of inquiries. I think it was a Wallace inquiry, 81, and then it was the Martin inquiry, the big one, in 84, when Hawke got reappointed and he wanted to run another inquiry. And it was Martin inquiry in 84, and the Labor government at the time said, no, we need to deregulate the whole financial banking system. And I know when it was February 1985.
Yeah.
So 2 years after I started, they issued 15 or 16 foreign banking licenses. And we had banks like Citibank and HSBC and Chase Manhattan and Barclays and all these big National Mutual, Royal Bank of Canada, who partnered with National Mutual, all these big global banks received banking licenses, retail banking licenses in Australia.
Yeah.
And that happened in February 85, and it just created this incredible competition. We saw massive product innovation. We saw Citibank bring in this thing called a Citi Power line of credit, right? And Royal Bank of Canada brought in a home loan interest saver account, which later became called an offset account.
Yeah.
And everything started in the mid-80s. And all of a sudden, bank net interest margins went from here to here with competition. And then, I was lucky I jumped into one of those banking licenses, National Mutual Bank, and the innovation and the excitement and the competition for customers. So the competition for customers and and relationship management was key. And from then we had this incredible dynamic, and then from that we had mortgage broking. The more it all just evolved, this perpetual motion of how can we better look after the customer, how can we better service the needs of the customer. So I've been really lucky that I've kind of had this banking environment that became a challenger banking environment, and then now a mortgage broking. So it's probably not so much looking back being proud of it, but it was just, hey, I've had a really good run and I've really enjoyed being part of it. And now I hand the baton over to our new managing director in Sean Reid, who'll do great. And then we hand the baton over to people like you to hopefully take this industry to new heights of customer service and customer care. So, not so much proud, but just, enjoyed it and had a crack.
Yeah. Well, I'm grateful that I've met you. I only been 12 months ago. I thank you for everything that you've helped us achieve. And thanks for coming on today. It was awesome.
My pleasure, Michael, and look forward to watching what Tusk Finance does in the years to come.
Me too. Thank you so much for listening and being a part of our community at That Backyard Property Podcast. We would love it if you could like, comment, or even share with a family member or a friend that might get something useful from today's episode. We can't wait to see you again next Tuesday.